RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello everyone, welcome back to the RationalInvestor.com's Daily Brief. No. Happy options expiry day. Probably most of you new to this game don't fully appreciate how significant these derivatives products play a role they play in the market. And this is the third Friday of the month in the merry month of June. Wait a minute, that doesn't sound right. Third Friday, 21st of June here. And historically, actually, we used to call this a quadruple witching day. Woo, spooky. But they got rid of futures on stocks. The Chicago One Exchange never really flew. They tried to get it going, but just people were just not that interested. So it is triple witching, right? Which would mean we have futures contracts, options contracts, and options on futures contracts all expiring today. Big day here. Index options as well. So there's a triple somewhere in there. Anyway, the point of the matter here is huge day in derivatives land, and institutional players often use options to hedge portfolios. And actually, it's interesting. I suppose maybe we'll circle back around. We'll look at it in the after party. I did have somebody on, I guess, Wednesday's video ask if we could look at things like the Bitcoin ETFs options. And I did put out a nice little summary report there after we did the video on Wednesday, posted in the last. And I said I'd circle back around, we'd take a look at what happened here today. So we'll do that in the after party. I suppose we could probably also look at things like the S&P 500 and some interesting stocks. For instance, well, anyway, we have an itinerary here, and this is the whole reason why I did the itinerary, because I have a really bad habit of drifting off and, half an hour later coming back to what I was supposed to be talking about. So let's follow the itinerary. Breadth data. At the moment, actually, I hate to say it, folks. I mean, especially if you're thinking, hey, I think the market will go down. Breadth indicator has actually put in a very powerful double bottom here on the S&P 500. So the broader U.S. stock market, I think it's pointing back up now after it's put in a nice base. The issue here, though, is that, of course, there are a few market darlings that I think have kind of skewed the performance of some of these indexes, and they look like they're actually under some pressure. As you see down at the bottom, NVDA and Micron, both two fairly sizable semiconductor players. And actually, interesting enough, first thing this morning, they were very red, but hey, you can even see they're dragging the market back up here. But NVIDIA and Micron were looking a little bit sanguine here this morning. They actually put in outside downside engulfing bars, not quite key reversals, so we can't, like run for the hills here. But nonetheless, the fact that they're heading lower here first thing this morning leads me to believe that those engulfing pattern signals were validated. And if anything, you look at something like an NVIDIA chart and it looks nosebleedy. So it really shouldn't surprise us. And nobody at TRI has any business whatsoever touching that thing right now. You were very, very late to the party on the semiconductors. If anything, interestingly enough, I am super interested in Intel here. I wanted to buy it down in the high 20s, but it just won't break back below 30 bucks, just pissing me off to no end. Anyway, he was bucking the overall trend in the semiconductors there this morning, but he is calming down a bit. I wouldn't mind buying some of that intel for my registered account. And actually, speaking of broader market and the breadth indicator here, kind of suggesting that whatever correction you were looking for in the market, it looks like it's played itself out. We are coming into the end of June, and I have told you all repeatedly. So I think this message should be fairly straightforward, fairly clear, fairly consistent. Usually the market loves to bottom through the July 4th holiday weekend. And then we transition into the summer silly market, which is actually often a really good time for things like venture cap. And all you crypto kids, finally the torture should be ending, but not just yet. It's only the 21st. Still got another probably a week or so to go, eh? I think my public commentary was we're probably going to see the market, that's still 2 weeks away, July 4th holiday weekend. So I'm not really looking for anything out of crypto. If anything, what I'm doing right now in crypto is I've got some stinky bids working, and I'm trying to get the market to back up into my stinky bids so I can get some really cheap coins. Got filled on that Kramer guy's coin. I mean, I don't know whether it's worth owning that or not, but what the hell, in the Solana meme coin land, why not? But also too, a couple other coins that actually stories that I really like. I suppose we'll circle back around, look at those in the after party. Working some stink bids. I think I got some fills today. I'm not quite sure, but anyway, we'll check in the after party. And as well, I was in there, especially with something like silver and gold. I have three different junior mining stocks that are basically silver, gold, copper, moly plays in British Columbia. Two of them actually have deposits greater than 3 grams per ton. That's sort of the magic number that you really need to see to justify a mine. And one's a bit of an intermediate play, one's a super junior play, and one stock that recently they reorganized is a land play up in that area. And the guy who founded Gold Corp, one of the biggest gold companies in the world, he's in there aggressively buying that stock. So I'm like, what the hell? Might as well join, ride his coattails. So over the past week or two, I've been getting filled on those names as well, and I really would like to build a nice basket of those junior miners. I think it's their time in the sun. And also too, like I really love the venture part of the market right now. I think it's undervalued, and I am starting to see a lot of technical justification to get bullish. So actually, this mutual fund that has been around forever, as long as I've been in the industry, they are specifically in the venture cap arena, and they've just put in a monthly W. So clearly something's brewing in the venture cap space and in the sort of junior part of the market. And it would make sense because we're sort of marching along this sort of capitalist path. If you think about like the 1980s, 1981, 82, that's when Jupiter Saturn crosses happened. Of course, that's when you had the big shift in the bond market that sort of started this whole baby boomer bull market. And 83, 84 sort of got going. And in that kind of environment, everybody's thinking backwards. And I remember then, that was the top of the gold market in particular. But actually, the gold and silver stocks and all of them, that's when the riches were made all the way into like 1987, when the market went absolutely crazy. And frankly speaking, I think the same thing's going to happen. And this is the capitalist process. Ironically enough, we have to get all of you out in the public to the point where you actually look at me when I start saying things like, well, you should sell halves on doubles, you should establish risk-free trades, and you should, play from a position of strength, and it's probably not a good idea to chase and buy up markets. You got to wait for the next bottom before you put any new capital into the market, blah, 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 everything you always hear Brian say. Just exactly what I was saying there 4 or 5 months ago in the crypto space. And the good part about crypto is it moves 1,000 miles an hour. So the corrections are violent and quick. So it's one good part about the face rip down right now. And we have to get to the point where people in the market are like, well, if an asset doubles, you don't sell half on a double and do a good risk management and play from a position of strength like that idiot Beamish. You should go and buy more, right? And you're stupid not to be buying here. That's where we have to get the market back to that state, and then we know that the top is pretty close. So when I look out into the world and I talk to people and stuff, they're still pretty damn cautious. The good part about what I'm seeing out of things like crypto right now, of course, is that the alt market is just completely collapsing. And you don't hear any Gucci sweater talk now. Holy moly, they are long gone. And I'm sure they're dying 1,000 deaths right now. We have one gentleman on the TRI site who sort of reports in what all these other professional crypto trading communities are talking about it. He's like, man, they just the horror stories coming out of that place is just a nightmare. So if anything, folks, it's a great commentary. I wish we could somehow get this message out to the public. TRI's got your back. We're not going to fill you with BS talk at the top of the market about how you should go in there and buy what I would consider very risky markets. And conversely, when I don't hear anybody at all, even the slightest bit interested in something like the junior mining market right now, for miners of gold, silver, and copper and stuff like that, the venture part of the market, I don't hear anybody talking about that part of the market. And what a big surprise! In come these weekly, monthly W's. What a shock! So anyway, we'll talk a little bit in the after party about what I'm seeing there. As I had said there a moment ago, and actually maybe we should try and stay on task before I run out of time here. That was a little bit of a rant. Sorry about that. Breadth indicator, I think actually looks perfectly fine here for the stock market. I don't really like showing the crypto breadth on the public broadcast. So in the aftermarket or the after party, we'll go and maybe take a look at crypto. We'll say, just you can see on this free screen, we follow weekly commodity trend survey, which is a nice simple way for us to just sort of see if we're walking into a trap in markets. Come into the after party, I suppose we can explain this a little bit more. What is interesting is our crypto top 30 that we're following. You can see that actually there's quite a few names that are in that sort of hunting buys kind of zones. So, and that only happens, remember, these are weekly price charts. That only happens when price is really coming off, right? And it's substantially below its 50% level on the weekly charts. So it's good to see. We're getting quite a bit of more activity in the sort of contrarian camp. I'm trying to teach everybody, ironically enough, to stop being a retail investor, Gucci sweaters, Gucci shoes, and remember that guy, buy Bitcoin at $70,000. You got to buy it now. Got to buy it now. Got to buy it now. How's that going? And start actually acting like institutional investors, buying bottoms of markets, buying down markets, forcing yourself to be bullish when everybody else is bearish, forcing yourself to be bearish when everybody else is bullish. So anyway, that's an interesting conversation. We'll probably talk a little bit about that in the after party and those names that are starting to look really interesting here. Econs tastes great. I'm a little bit worried that these central banksters in my country succumb to political pressure. And this is, if anything, one of the good things about the US Federal Reserve System. Could be good, could be bad. I don't know. It's tough to say. In all of these other countries, the central banks are just a subsidiary of the government. So, to all intents and purposes, the government can quite literally come in and strong arm the central banksters to act. And I think what we're seeing in China right now, again, these, and I have no idea why, but these politicians in my country, they've completely abandoned sort of democratic principles, and have completely embraced China CCP communist practices. It's disgusting. There's a bill they're trying to pass through my government right now that literally is communist. It's shocking. But anyway, that aside, it does look like that the central banksters, with them lowering interest rates here recently, did not do Canadian citizens any favors whatsoever. Retail sales came out of China here today. And as you can see, these numbers are starting to get staggering, right? This is a month over month. You're not supposed to grow retail sales at this pace. This is what exactly, if you remember Stanley Druckenmiller, when he got all pissed off at Jerry down there in the States, because this is exactly what Jerry did with short-term interest rates too low there, and retail sales down in the States went absolutely insane. And of course, China followed suit, same thing. And he's like, why are you doing this to our society? You're completely destroying the purchasing power of the currency. And lo and behold, the Chinese central bankster and this guy, I don't get me started on these technocrats. I don't understand why they even have jobs, let alone the actual amount of money that these people get paid, because they're always wrong. I mean, you saw how all these central banksters got that whole inflation thing completely wrong. And once again, this guy succumbed to political pressure. He lowered interest rates here recently. And now this, like annualized, this is going to be like 20% annualized in retail sales growth. Come on. What are you doing? And what's so stupid about these idiots, right, is that actually, if you read the news headlines, look at that. They still have this. Canadian retail sales expected to plunge in May. Well, it looks like you got that completely wrong. Way to go, you doofuses. So not only are the central banksters completely wrong, but of course the media is completely in this sort of 1% WEF woke politician nonsense controlled messaging, and they're completely wrong. I mean, these people are the worst traders possible. Do not follow a central bankster and they're advising, through these like public conferences and stuff that they do, press conferences and stuff. They're just stunningly wrong in their analysis, and it's kind of funny to see how the media here buys their line, hook, line, and sinker, and they couldn't be more wrong. Absolutely shocking. So anyway, point of the matter here, Econs actually in the States, and this is why it's interesting to see the breadth indicator putting in a base here at the flat line, just sort of like neutral, and then starting to W out. Internal data here, the US economy is actually showing growth. We're above 50, which of course is growth, and you can see that these numbers are actually moving higher. And when we look at these like composite flash PMI, there's a bunch of mouthful of data, blah blah blah. I mean, you tell me, does that not look like an economy that's on the grow? That doesn't look like an economy that's shrinking. There's no reason to be cutting interest rates in the face of that. That's ridiculous. The problem here, of course, is the Chinese go and cut interest rates. And then, all these, this housing industry, it's such a train wreck here. This bubble is going to burst at some point. I don't know when, but it will. And it is going to be ugly. But in essence, what I think's happened here in China is that the central banksters basically, balked, because all the real estate developers are such a massive part of the economy. And they all started calling up all these politicians and saying, you got to get them to lower interest rates because we're dying 1,000 deaths here. But what's the mandate of the central bank? Isn't it to control price inflation? Isn't that the mandate of these stupid central banksters? Man, well, obviously that's not the case. So, very strong data coming out of the States. And interestingly enough, because the feds have not given in to this political pressure down in the States, the housing industry, not representing more than 33% of the economy. Remember, that's our bubble indicator. It'd be interesting to see what the percentage of the Canadian economy is real estate and real estate related. I have a feeling it's probably like 50% of the economy. Remember in 2000, if you were around, and actually this is part of our level 1 education where Nortel Networks, one company in China, this is how fucked up this Canadian Chinese economy is. One company represented more than 35% of the entire Canadian stock market. One company. This is nuts. I mean, that's how screwy this country is. Terrible, terrible economics. And within 5 years, Nortel was bankrupt. It was gone. Company disappeared. And that's how dangerous the situation here is in China with this real estate industry. But down in the States, I don't think there is a bubble at all in the United States real estate market. They are actually deflating the real estate industry and deflating that as a portion of the economy, which is exactly what should happen. You know, the economy should roll from one sector to another sector to another sector as we move through these cycles. And I really like the venture cap part of the market. And I really like sort of, innovation, technology. I mean, do you think there are going to be any small cap players in the AI industry going forward? I mean, you know the answer to that. How about in the crypto space? I mean, hell, now we're hearing from both Biden and Trump that they're both, oh no, you know what? We're falling in love with crypto. We love crypto. I mean, is there any opportunities in that? I mean, in essence, all of your altcoins are basically in that venture cap part of the market. How is something like that REN done? I mean, RNDR, take a look at the price chart. It's beautiful. If you get a nice pullback into a reload zone, do yourself a favor. Anyway, so the point of the matter here is I think that the US economy is just humming along perfectly fine. Thank you very much. Doesn't need to be tinkered with, but at the same time, too, no justification for lowering interest rates. And there is no real estate bubble in the United States. If anything, I think the US economy is on a very good footing. Can't make the same comment about China. This is a train wreck. And now what really sucks about this is they're starting to bring back the hyperinflation. So get ready, folks. You want a direct correlation when the US retail sales went absolutely crazy. The inflation went crazy down in the States. It's just a function of the velocity of money. And of course, Mr. Druckenmiller lost his lunch over it. And I think that was the number one reason why Jerry got some religion is people that actually matter down in the United States were like, what the heck are you doing to our economy? Anyway, blah, 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 blah. All right. This free broadcast, I started off the conversation today. I actually think that the ES has hit some pretty important technical objectives. You can see there's a bullish bought technical objective just a little bit higher here, but I think that because of the options expiry, they're kind of just parked the market. Usually what happens is the day before these big quarterly options expiries, that's when most of the business is done. You saw a lot of fireworks in the market yesterday. And then on actual options expiry day, it's just a big hurry up and do nothing. Because what they want to do is, of course, on the expiry day, that's when the brokers call up their clients and go, oh, by the way, did you know that you have an option that is expiring today? And they go, well, why didn't you call me yesterday? The price was all the way up here. I could have sold it. Well, no, it's just, and this is so typical. Remember, I was an options broker for a long time, so I remember this with spades. So anyway, I think today is going to basically be a non-event day. Interesting to see like things in the Bitcoin. Like I said, we'll circle back around and look at this after the fact, although I think I probably took it off the screen. Our screeners here got this screener system working up really nicely here, spat up a buy. I think I showed you the other day the screener that I have right now on the site that I've been putting together of late, spat out a buy signal on the Occidental Petroleum on Buffett's buy, and you can see just what's happened over the past couple days on this damn thing. But basically the system saw the W, saw the indicators pointing up, and okay, this thing's going up, and boom, up it goes. What's interesting is today's screener results spat up FedEx. Now this is interesting because this thing wouldn't rally unless it feels as though energy prices are relatively well contained. So we'll see how this thing goes. We actually, for quite a long period, very concerned about the Dow gold ratio. I suppose this is heading off on another tangent. But Dow gold ratio, or not Dow gold ratio, beg your pardon, Dow theory. So you can see FedEx is a huge component in Dow theory, excuse me, in the Dow transports. And you can see it's trying to bottom and point up. Of course, there goes the Dow Industrials. They're nice and happy. We'll see whether this thing can break out here or not. If it can, and these W's come in, then I think the industrials could move up a chunk here. I guess the point that I'm trying to make here is, FedEx is a great sort of leading barometer for the economy. So to actually see FedEx look like this, really pretty price momentum. Beautiful. In fact, Stewart, he's a big fan of the Bollinger Band squeezes on RSI as sort of a building of energy. And of course, you can see all these W's that are coming in across the board on these indicators. And of course, we got W's in price. And whoa, boy, that thing, I don't know whether this is a new bull market, but I definitely could see this thing rally back up to the top end of its range. So that's an interesting development going on in the market. And of course, our screeners picked that up nicely. I would not be averse to have actually bought that W right there as a trade. Good to see the screeners are rocking and rolling. And also, too, further anecdotal evidence if the transports and something like FedEx is feeling a little bit more uppy. I mean, that's not what a bear market looks like. A bear market looks like lower highs and lower lows and just grinding to us into the ground. Notice this is higher highs and higher lows, kind of like what we saw here. I don't know whether we go through a phase like this, but it wouldn't surprise me. The only thing that's sort of missing out of this picture, and it might be because today is that options expiry day, is a little bit of a lack of volume. If we saw Monday morning that the buyers came in earnest and really broke this volume out, then I'd be like, this is a foregone conclusion. We're heading up here, folks. Broader economy, it should be okay. I don't know whether Bitcoin and crypto is ready to go. I did want to just, and I suppose we'll finish off with a little bit of a comment on crypto and Bitcoin. I've said this before, and I put out lots of tweets and messages about this. I do think to a certain degree that Bitcoin itself was parked lately. Huge options open interest. We can take a look at that in the after party in particular. But here we are. This is options expiry day, and there's the price of Bitcoin ETF. This is the only one that has options right now. And you can see that it's basically just parked right in this gap. Gaps like to be filled. We all know that. So not really a huge shock there. So as a result, when you look at the actual Bitcoin price itself, kind of wishy-washy. What's scary here, and of course, we're heading into the weekend, so we'll see what the crypto kids do with the price. Usually, we see that, of course, Friday is options expiry, weekly, monthly options, etc. You notice that we've held this 13 EMA this is a weekly price chart. Every time we dip into it, it has acted as support. And what I often find over my career is usually we dip into this thing and it has to test it a few times. Now the question is, do we actually close the weekly candle below it? If we do, then next stop is probably our 30 SMA on the weekly charts. And wicks and tails like to be eaten. You know how that goes. Maybe a nice little panic stab down into 38.2s. It would be appropriate. I mean, it wouldn't be out of the question. And then if we look at the daily price chart, this is why I like using these moving averages. Notice that 30 SMA on the daily looks a hell of a lot like that 13 SMA on the weekly. And the 200-day daily, 200-day simple moving average, wicks and tails like to be eaten, like we said, looks very similar to the 30-period moving average on the weekly. Wicks and tails like to be eaten, et cetera, et cetera. So right now, I would say that there's your trading range. 30 SMA on the upside, of course, that's just going to bang against trendline resistance. You can see, there's a whole bunch of trap bulls in this one candle here that would absolutely love to get released. That was on that FOMC event. And any kind of counter trend rally up into that. And I'd be happy to strap on a short again. I don't know if it's going to happen. Who knows? No sense in predicting the future. We'll just react. If anything, what I'm worried about, not so much about Bitcoin. I think Bitcoin, to all intents and purposes, like we showed you on that BITO chart, I think it's parked. The options boys have basically removed the volatility from Bitcoin price. Be interesting to see what happens Monday morning after the options expiry. But I think the dangerous part of the market actually is things like the total. If we use that same premise, we do have this 200 SMA. This is a daily chart on the total here. This is the just the total itself. Wicks and tails like to be eaten. That's the same conversation about Bitcoin. What scares me about this chart, though, is there is 50%. That's what should naturally happen. There's that 38.2 we pointed out. Also, notice that is a 4.669. This thing's got a head of steam behind it too. I mean, we are heading down and in a hurry. And I even put out a couple notes about the total three. And interesting how we are, and this is back to the weekly chart. So we are right at that 30 SMA. And notice that if we lose the 30 SMA here, so that corresponds with the 200 SMA on the daily charts. If we lose this 30 SMA, you can see where 200 SMA is on the weekly price charts. Right back down, Mountain Man. We also have a nice bear AB equals CD that would take us down into that moving average against Mountain Man top. And then ironically enough, if we actually just draw some simple trend lines for the total crypto market minus Bitcoin and Ethereum, these are your trend lines, folks. And what scares me about this, of course, don't want to freak everybody out. I like the idea. Actually, before I get into that, where's the best place to do this? Actually, I think I had it over here. We actually drew up this chart of crypto, total three minus Bitcoin minus Ethereum. We actually did up this chart quite a while ago when I was down in El Salvador. That was an interesting experience. And one of our guys, Cotter, was on there. I haven't seen Cotter on the site in a while. I'm not quite sure what happened to him. But nonetheless, we had Cotter's happy zone. This is where he thought he would step back in on crypto. And frankly speaking, I kind of agree with him. Anybody who was watching the videos like through that February, March period, we did this chart up. What I do like, there's that moving average sandwich. This is the daily chart again. There's that 200 SMA that we said on the weekly charts. Looks like the 30 SMA. There's the 30 SMA there on the daily charts. I do like this as what I would call a moving average sandwich. So I don't think, and this is just Brian's opinion, I don't think that we lose these lows right away. If anything, I like the idea that there should be, like I said, through this end of June, beginning of July, there should be some sort of pivot here, which sets up a bit of a summer rally. Usually crypto has a pretty good July, August. Then once we get into sort of September, October, that's when we roll over in earnest. So we'll see what happens. Only time will tell. But long and short of it here, that's a tough looking chart. And I put out a tweet even today. One of our longtime site members, who actually is a fund manager himself now. I mean, talk about TRI training people. The people that we train go on to actually be institutional type traders. And gee whiz, what a surprise. They're actually like fund managers in this space now. But I was joking back and forth with him. Why do I use certain moving averages? Hopefully this video today kind of explains that a little bit more. But man, the final message that I gave to him this morning was this chart does not fill me with bullishness. I do like the idea, on your altcoins, if you can go nibble away, especially ones that are just absolutely, they're just throwing the baby out with the bathwater. I love that. But a chart like this, we know that crypto is not a bull, and don't fool yourself, people. Just keep this as simple as possible. This thing becomes a bull again when we actually see W's start coming in. And there aren't any W's anywhere in sight here. That, if anything, is a very ugly chart. So go slowly. We still got a couple weeks to go here. until the actual official sort of July 4th holiday weekend. I don't know what the hell they're going to do here to the market over the next week or two. I wouldn't look for a huge bull run. Maybe if we're lucky, today's weak price action is nothing more than just a function of the options expiry, and they can start basing this stuff. But M's are M's or M's, whether you do things like fog and bombs, which suggests we need to come back down, test the lows, whether you do things like, M's and W's got lots of M's working here, whether it be reload zones. Look at the volume profile. We're coming into a muak here. My hunch here is we probably got to trade back to this big node here and just fill in this whole profile here. This is going to take some time to clean up here, folks. And I don't think there's a huge hurry here. But at the same time, too, I still fully 100% believe pullbacks are buying opportunities. So just be patient. Notice how long this bottom took here to base. Like, where did this thing come from? Is it going to show us? You can see. Oh, there we go. How long did that base take to form? So, and where are we now? I might even argue that we're sort of like right here right now. And so that was May, and this thing broke out literally a year later. So there's May there. So what we really want to see for us to get uber bullish again is we need to see this price chart look like this. Does this look like this? No, it doesn't. So there's no hurry here. Go and enjoy the nice weather. Have some fun with the kids. In the after party, I'm going to show which names I'm stepping in, doing some nibbling. I do like the idea that there should be a nice counter trend rally, and this should be our summer silly season. And the names that are putting in cute little bottoms on good volume, which are probably going to be a lot of meme coins and stuff like that. Well, you could probably make some nice doubles out of that and have some fun, but we're not in any rip-roaring bull market. If anything, we have to get to the point, sadly, where we need to hear a lot of pain and a lot of suffering and a lot of this sucks, man, and suicide hotlines and all that kind of stuff before we start getting like, oh my God, this is incredible, pound the table bullish again. It's going to be a while. Okay, everybody. Sorry to be the bearer of bad news, but if it's one thing, hopefully you can take from the Beamish is I'm not going to fool you with a whole bunch of hot air. I'm just going to give you the straight goods. M's are bearish, W's are bullish. You can see the M's. That's about the end of the conversation. Have yourselves a great day. PMA for the win. Let's head on over to the after party and pick apart some of the options data, answer some of your questions, take a look at some of the names that I'm buying right now. And I am on the buy side, but unfortunately not on big names like Ethereum or Bitcoin or anything like that. I wouldn't touch that stuff right now at all. So, okay, have yourselves a great day. All the best. I guess we'll see everybody for broiler chickens on Sunday. And the only thing I have for you is bye for now.